The Dow and S&P 500 pulling back from record highs, but for the month, the stocks are bucking the historical trend of weakness. The third quarter has been volatile, and with earnings season and the presidential election around the corner, there's more uncertainty ahead. We're looking at how to navigate this in the Options Pit, sponsored by Tasty Trade. Brian Overby, OptionsPlay Senior Options Strategist, joins us now. Brian, it's good to see you. Maybe start big picture for us, Brian, because you look at these markets. Fed last week delivers that supersized cut. We're kind of drifting here. You say to you look at these markets, Brian, you say, seems kind of nervous to you.
Yes, I guess my outlook would be bullish but nervous. And one of the biggest indicators to me was what actually happened after the Fed had the 50 basis point cut. We saw the markets actually close down on the day after that, and there was a lot of nervousness. A lot of people in the marketplace basically thought to themselves, well, if they're willing to do a 50 basis point cut, there must be something, lurking in the economy that they're scared of. And then all of a sudden the markets closed and the futures market took over, and everybody collectively decided, well, you know what? If they're willing to go 50 basis points, that must mean they're not that worried about inflation. And that kind of became the story. So then the focus went from inflation to jobs, and the market took off. And so as long as the economy feels we're doing okay in the job front, then the market decides that it wants to set new highs. But there's so much volatility in the marketplace. It's kind of hard to decide exactly where the market wants to go. And we got a little bit of complacency in that we actually look at the VIX index and we see that trading down around 15% in September, but it's been all over the place. And so good news, bad news situation, but I think overall the market's extremely nervous until we get to the election.
Well, and sort of, if you look at the VIX seasonality chart, you can kind of see that. That's a chart that you highlighted for us. If you look at the VIX, now this is the VIX, sort of the average of the VIX over the last decade or so. And what we tend to see is two peaks in volatility in the year. One is in March, and the other one comes, it looks like they're eyeballing it in early November. And what's interesting to me, Brian, is we keep talking about how terrible September is, but that's not when volatility tends to peak. And the other thing that's interesting to me is that this chart is for 10 years that included election years and non-election years. But we still saw it peaking in November. What do you make of it?
Yeah, well, the biggest thing about the VIX and the fact that September and October just seem to be always the most volatile months. There's no real rhyme or reason behind it, and it doesn't necessarily have to be an election year for that to happen, even though the numbers have shown that in election years, usually 1 month prior to the election, you get the highest spike, or I'd say the highest average volatility, and that happens to be October too. But if you just go back and you just think about all the big downturns we've had in the markets, they're usually on a Monday in October. No real rhyme or reason to it, but it's a fact. So when I look at the markets and I'm going into October, I'm always going to keep that in the back of my mind on the way that I'm trading. So a lot of the trades that I'm doing inside the options trading world are neutral to bearish on the marketplace. And I really want to get that one big unknown event, which is the election, out of the way. And once that happens, considering where the Fed has been leaning as far as interest rates are concerned, that can really be a catalyst to make that market drive higher as we get into the new year.
Brian, let's talk about some trades. One you have more long-term would be DR Horton. Walk us through it.
Well, the biggest thing about DR Horton is obviously when the Fed cut the rates, it was a surprise to the market. Well, even though it was about a 50-50 chance they were going to go 50 basis points or 25 basis points, I still think the market in general was surprised by that. And ultimately, that drives interest rates down on mortgages. So the housing market was anticipating this rate cut, and it ran up into that announcement by the Fed in the Fed meeting. And now they're even talking about more rate cuts going into next year. And the market has had a little bit of a nervousness about sell the rumor or buy the rumor, sell the news scenario. And I think that's happening a little bit today in the home builders. We see DR Horton down a little bit, but I want to take an opportunity then to just get long some of those lower valued stocks. As a matter of fact, a lot of the stocks in the home builder sector are trading at decent PEs or decent valuations relative to the rest of the marketplace. So things can only get better if you think about as far as interest rates and the housing market. So I'd like to take that opportunity to go on out and actually buy a long call option, and we're going to go deep in the money, and it's going to be a surrogate for actually owning the stock. So if you're thinking, I'd like to buy 100 shares of DR Horton, well, it's a fairly expensive stock to buy 100 shares of. But if we go out until May, we're going in well into 2025, and we go deeper in the money, we're going to pay for that option contract. But guess what? It gives you a lot of exposure to the actual stock without all the risk. As a matter of fact, you're looking at putting up about 19% of the total price to actually buy the stock. But as the market goes up, you're getting about 80% of the representation of actually owning the stock outright, of actually owning 100 shares of stock outright. So in my mind, this totally goes along with the I'm bullish but nervous situation. We had a big run up in the home builders. I would like to participate, make sure that I don't miss out on the next big run up, but I don't want to have all the risk of actually owning 100 shares outright.
Brian, thank you so much for the trade suggestion and the options analysis. Appreciate it.
Thank you.